All right, so welcome. And today, what we're going to do is chat a little bit about the Fed tightening and why the cost of everything is going to still stay high, even as the Fed continues its aggressive tightening stance into, already such a high interest rate. So ultimately, when you look at the Fed fighting inflation and we take a look at kind of what's going on right now, the Fed continues to keep pushing things to go ahead and fight inflation. So they continue to raise rates and continue to try and curb down the price of goods going up as quickly. Now, unfortunately, prices of goods continuing to inflate and increase in prices is just a natural thing that happens overall across many years. So if we take a look at kind of historically what's been going on, this is from macro trends. You can look at copper prices, which has been around for quite a while for, wiring, house wiring and that kind of thing, along with plumbing and many other factors. But here since the 1960s, it's been kind of going up, as you can see, and it just continues to go up. One of the easiest ways to look at this chart is to go ahead and just take kind of a lower viewpoint. Just take a dot over here from the lowest point, take a dot to the highest point, and just get a trend. And that gives you kind of, sometimes the price is higher, sometimes the price is lower, but overall we are trending to the upside. And that's just a natural progression of prices. They just continue to inflate. Now, what is the Fed actually trying to do? Well, rather than us getting peaks like this or peaks like this, they're trying to curb it a little bit. So instead of us continuing to go on this trajectory, they're trying to even it out. Unfortunately, as this evens out, it's still going to keep the prices now at this point. So now we're in a new range, and then we'll continue to go higher, and then we'll be in a new range again. And that's the point of why everything will still continue to stay high. And not to mention, people get used to prices. Companies get used to paying higher prices for things. So it's very difficult for everyone to say, hey, well, I'm going to go ahead and lower things. Kind of how often have you heard, or, people just go out and say, you're trying to buy a car. And then you see like a list price of, let's say, $18,000. And then the guy says, you know what? Let's just go ahead and lower it to 15,000 for you. You got to usually work at it to get kind of a good deal out of it. They're not just going to say, well, hey, my cost has been going down. My employees are in a good mood. Business is great. I'm just going to go ahead and lower the prices of the car. It's not the way that it works, right? And that's the same thing here, is that naturally, manufacturers and producers of materials, they continue to see their costs rise, and with that in mind, the same thing happens, that they pass that cost down. If you look at ground beef production, same thing here. So ground beef's been around for quite a while, but just let's look at here from 1998. It's about $1.84 for all uncooked ground beef per pound. And then as we continue to go, you can see the price continues to inflate here as we go to another year, 304, $4, and now about 530. So all the Fed is really trying to do is, between 2018, 2017, we're trying to kind of keep it in the same range. There are some times where it does kind of go down, you can see, but not by much. So rather than, again, going up like this, we're just trying to slow it down, and keep it kind of at normal level. But overall, the value of your money continues to become worth less. So this is why the fact is that everything still will continue to cost more. It's just that now we'll be in a new bracket. So as we've continued to ramp up, we're hoping that it now will start to slow down. And then again, it'll just kind of trend this way. But rather than going up too quick, we'll try to slow it down. And that's really what they're aiming to do. But unfortunately, that still means you'll be in the higher bracket. What a lot of people think, though, is that, we're going up like this, that they're thinking the prices will come down, and now I'll be able to buy this ground beef, instead of like $5. Now, are you going to go back and get it for $3? No way. There's no way. But maybe instead of paying $5.90 next year, you might only pay $5.20 next year. So the point is that it'll just kind of slow that trajectory down, rather than keep going at the same pace. And this is why the price of these things will still continue to kind of inflate or stay high, and not pull back. Now, in certain industries, like when we look at lumber prices, those have come down. Some of this is just due to supply issues or just euphoria of purchasing. Same thing goes with housing. Some of those things have just been a little too extreme, and when the moves are too extreme, they do have kind of a pullback. So when you start looking at something like this, you see how it just ramped up to lumber of about $1,600 here. And then it pulled back. So even then, though, when you start looking at this chart just from here to here, we're still kind of going, and we've had some peaks where it was above, below, and a really ramp up here. So I would expect to go a little below, but still, you're still trending in this upward fashion. So it'll still continue to kind of grind higher from here, from the 1970s all the way to now 2020 and 20 beyond. So as you look at this, it'll still continue to be high. It just might not be to these extreme levels. And the same thing goes with housing. You might have a little pullback here, but you're still trending at the upper range. So let's say a home cost $1 million at some crazy point in time when it was used to be maybe $500,000. And then we had the COVID thing happen, and then people rushed in to buy some bigger homes. So it went up to $1 million. Well, now it might be like 850,000 or something like that. But the point is, it's still way higher than what it was. It's just maybe not at extreme elevated euphoria levels. So it still continues to grind up. It's just maybe not at extreme levels. So anyway, when you look at this, be aware that you're probably still going to see these things. And a lot of companies are still trying to fight this to go ahead and cut some costs. For example, Amazon firing employees. You look at a lot of other ones like Twitter, laying off employees as well, with Elon just buying it down, sacking 50% of the workforce. Yeah, he's trying to cut costs. I mean, it makes sense. Who else is Disney laying off employees, or possibly, I think not yet, but it's plans for laying things off. Look at Meta cutting employees right there as well. Not Meta. Facebook laying off 11,000 employees here as well. It's just struggling, right? And when they're starting to cut down the employees, yeah, I mean, he's doing some other stuff with the company. Maybe it's not working out. It's not panning out. It's not bringing in money and revenue. And therefore, they got to cut costs to be able to have more funds in there. But the downside is that, yeah, you're going to have less money to spend because you got a bunch of companies laying people off, and those people aren't spending money. And then as the money turns over multiple times in the industry, like let's say $1 is spent and then it's spent again. So, you buy a burger. So now this burger, goes to that employee. So that company has some money. Then he goes out and buys, let's say a new phone or something. And then that person that they buy a new phone from, let's say it's like a repair shop or something, it's like a used phone, but then they go ahead and they pay rent, and then that dollar gets pushed to another spot. So it's like turns over like 3 or 4 times until it really starts to burn through everything through just a churn of capital. But ultimately, everything is just raising in prices, continues to raise, and it'll stay up there. It's not going to go down in a big way, right? That's just a natural flow of money and just inflation, and be prepared for higher prices for the foreseeable future. So people always complain about, gas prices because like the president is in control of it. No, I mean, they're just naturally going to go up. So the thing is every last president has had lower gas prices. That's just that's just economics. So don't be silly about it. So yeah, it's not about Democrat, Republican. It's just gas prices, just over the last 50 years, when you start looking at the charts, has nothing to really do to the president themselves. It's just overall, just energy just goes up and prices. And looking at from 1993, here's kind of June prices, they just naturally continue to go up. And of course, sometimes there's, oil wars and that kind of thing. But overall, through history, they just still continue to inflate. I remember when I first started driving, the cost of a gallon was about $1.44 or $1.40. And and now it's a lot more. So when you start looking at it, $4.90. And then back in over here, as they start looking at it, what is this? National average gas prices. Oh, that's in 2022 dollars. But yeah, you look at it, 21 cents, 19 cents, 31 cents, 34 cents, 86 cents. So they just continue to go up. So you could always say like, hey, the past president had worse gas prices, right? So that's just, a thing that people do to fight, politics, but in general, they'll just continue to inflate with time. Look at the cost of milk right here, just continues to inflate. Here's gas prices, bread. Look at that. Bananas have been pretty consistent. So if you like bananas, good for you. And electric power and so on. So anyway, my point being is that he'll continue to inflate with prices. And really, when you look at the cost of everything, it's just going to stay high. So be prepared for it. Make sure you continue to have money and funds that you save for the future, invest. And definitely, if you're interested in learning more about trading and investing, check out our websites. You can learn more about it on the tradersfly.com website and also the criticalcharts.com website as well. There's a lot of stuff to learn there, from videos to how-to articles and courses and educational material. So definitely check it out. Thanks for joining me in this video and episode, and I will see you in the next one. All right, thanks, and enjoy the week ahead.